Hey everyone, welcome to the HASHR8 podcast. I am the Bitcoin Broski here today with a special guest. This gentleman and I have connected recently, had a few great conversations. Welcome to the show, Kyle Herron of Frontier Mining.
What's going on, man? Thanks so much for having me here.
Hey, happy to have you, Kyle. I'm looking forward to this talk. You know, we've had a couple of chats before. The conversation was great. I was eager to get you on the show. And just to get this out of the way before we get into the conversation, really, this is a mining show and people are always curious. So why don't you give a high level overview of how you got into Bitcoin mining?
You know, this is never a straight answer, man. I haven't met, honestly, anyone in the mining industry who could just say, well, you know, I studied mining for 5 years and then I landed in the space. That's what happens when you're in a niche industry, man. This is the wild, wild west out here. And of course,
Absolutely.
it's always a circuitous path of how you land in the space. My story is definitely no different. In fact, the story of Frontier is no different. And just like many people in this industry, we kind of unintentionally stumbled in. Never saw myself kind of having a career path or any sort of career in mining or any sort of career in crypto for that matter, because as of 4 years ago, I did not know what crypto was. But of course, your life can change pretty dramatically. And I'm really grateful that it did. How we ended up in mining, or how I ended up in mining, started a long time ago. And that was thanks to my buddy, Matt, actually. So shout out Matt if you're watching this right now. He introduced me to Ethereum in its very early nascent stages, really nothing more than a Netflix documentary. I said, dude, you got to check this out. Super interesting. He invested in it actually before it was launched on most major exchanges. And he was able, he's a hardcore techie. I can't remember if he was mining it or how he got his hands on it, but he got into it really early. He's like, you got to take a look at this. So I watched this documentary on Netflix. I put some money in ETH around $8. And before I know it, I'm like, this is a really financially rewarding opportunity. Now, granted, like, I'm not a believer in a get rich quick scheme. So I was still pretty hesitant in the concept. But what was interesting is at the time I was actually running an agency, kind of a marketing growth agency for early stage companies. And we did a lot of like brand, website work, things of that nature. And so I was kind of building up this crypto sentiment. And then right during that time, this is keep in mind, like, you know, kind of early mid 2017. So this is right during that era of when ICOs were starting to take off. And we actually had a few ICOs reach out to us, or I shouldn't say a few ICOs, I should say a few very headstrong founders who thought that an ICO was their quickest path towards getting absurd amounts of income in their bank account.
Sure.
And so they came to us and they said, hey, you know, we know you guys are really good at marketing and branding. We want you guys to basically take this token or this concept or this thing, and we want you to just help us basically market and brand it, kind of kick it out to the world, effectively help us raise money on it. We're like, cool. Here was the interesting part with, you know, we're a company that we're a relatively new company at the time. My partners and I started the business about a year prior to that. We were charging nothing for our services because we're young kids, you know, and we were just basically trying to figure out like, well, like, you know, maybe we'll charge like maybe like 5-10 grand for a website. And then if you remember, man, like the concept of money was a whole different thing back then.
Yeah. Well,
where you had
so easily, you know?
Exactly. I mean, what was once spending $10,000 was now basically the same impact as spending like $100,000. And so these people came to us and they were basically like, yeah, you know, like, what do you think? Like maybe 50,000 for the website? We're like, sure. Like a plan. It was a super bizarre time, man. Talk about the Wild West. That was the real nascent stages of it. That was like the Wild West of the Wild West.
Well, but I mean, like at that stage, you must have gotten so much information and like, okay, so whenever you're on the advertising or the marketing side, it's a unique way of seeing an industry because you get little bits and pieces of lots of different players. So you're seeing behind the scenes of lots of different businesses, and you're able to glean so much more information. I found like my first entrance into crypto is I was selling TV advertisement in the same hype cycle to those same companies, right?
Yep.
And we would do basically like short form documentaries for these people. So we get behind the scenes looks at all kinds of different businesses. And it gives you such a different perspective on how each of these entrepreneurs is approaching the market, right?
So. Yeah. No, you're not kidding at all, man. And honestly, I think the interesting thing for us is the way the entrepreneurs were approaching the market, at least in the context of the ICOs of 2017, was chase as much capital as possible. Like that was the mentality at the time, because I think, again, like the whole get rich quick scheme was very much in everybody's brain. This is prior to the IRS getting any sort of involvement, prior to any SEC involvement. This is just kind of like everybody have fun, take advantage of the market while you can. Sorry for those that don't know, but in 5 years from now, you might end up getting screwed. But you know what? Until then, enjoy the ride, enjoy the cash that you can bring in. And so for us, what ended up happening is we had all these ICOs come to us. They said, hey, launch our websites, brands, et cetera, help us get our coins off the ground. We said, sure. Didn't really know what we were doing, but we did know our way around websites and brands. But, the long short of that story is that's kind of how I fell into the world of crypto. But of course, as you and I both know, crypto is a niche, but mining
Yeah.
is a niche of the niche. And so the leap to get into mining was a whole nother path. By that time, early 2017, I'm pretty warmed up to the idea of crypto. And I had actually just finished a little bit of a speaking tour over in Southeast Asia, just talking about kind of the future of entrepreneurship, future of technology, things like that. And I had posted one of my speeches on Facebook. Well, lo and behold, I never use social medias. I'm not that type of guy. And we can have that conversation too of why I'm not a believer. But I had posted this thing on Facebook at the time. And as it turns out, one of my longtime good friends from when I was 6 years old, my buddy Arland, who, by the way, for those that know, is my partner and the CEO of Frontier, he reached out to me and he said, hey, dude, this is like really cool. What are you up to these days? And I had kind of told him my story and what we were doing with this company CO that I was building. And he's like, dude, I'm in corporate America. I'm really burnt out. Like, can I come check out your guys' offices? And can we just have a conversation? I said, 100%. So he's about an hour north of me at the time. He comes, drives down, checks out the office. And before we knew it, within a month of that conversation, I hire him onto the team. And so it's funny how our worlds ended up flipping, but Arlen was originally one of my guys. So he comes onto the team. He's kind of comes on as our CTO type figure. And this is where it got super funny with. This is a question that I got asked by him that I'll never forget, because this is where my time in mining really began. Arlen comes to me and he says, hey, I got a question for you. Like, I noticed that you guys are in an incubator. At the time, that incubator was sponsored by my university. We were graduate at the time, but they were supporting alumni. And he said, hey, are you guys paying for power and cooling here? And as you know, that's the question that we all beg to ask. Like,
Yes.
do you have free power? And
Free
I
power,
said,
sir.
actually, yeah, we're not paying for power and cooling. He said, okay, I'm going to come back with something in a couple days. So the guy shows up probably 2-3 days later with literally PVC pipes and graphics cards kind of stitched together with literally like Scotch tape, and comes down to the office and he puts together this GPU rig. And granted,
Yeah.
at the time, I didn't know what a GPU rig was. But he comes and puts it together, and he fires it up and he shows us like, man, like when Bitcoin's at 21,000, like this thing can be really powerful. And so ultimately, that's where I kind of got my first introduction to mining. And again, to put a lot of long layers of this story a lot shorter, what ended up happening is that Arlen and we started just kind of shooting the shit on the side to each other, and basically said, look, like this is actually a really compelling opportunity because the type of cash that was pulling it was super captivating, right? So we went and took it and we started posting it on some of our social medias, just like, LinkedIn, Facebook, Twitter, etc. And some of our buddies from the Silicon Valley area, some of our investor VC contacts, they were like, hey, this is really interesting. We don't have exposure to crypto. We don't even know what crypto is. Like, can we grab one of these things off you guys? Before we knew it, Frontier was doing like six figures of sales without us even having an LLC or a brand name for that matter. And then, basically what had happened is that's how we got our entrance into the market. Our ultimate vision at the beginning, very much so unintentionally, was to help kind of bridge that gap between what I like to say are the crypto ignorant and the crypto curious. And ultimately, what we ended up making them all was crypto informed. And really that's kind of formed the core competency and backbone of what Frontier has become. We're very much focused on working with kind of that ignorant but super curious investor, that individual who wants to get involved in the cryptocurrency and a mining space, but has absolutely no idea. We very much serve as like a partner and a friend and a guide in the mining space. And that's how we've always positioned our business model, because that's where we came from. We came from working with people who basically had no idea what world they were in. And then slowly we kind of helped to bridge that gap. So you fast forward to where we're at now, and how do you go from, helping guys build GPU machines all the way to building world-class data centers, which is where we think we like to say we are today. And ultimately what ended up happening is that, we were building out these machines, but man, just like everything else in the world of entrepreneurship, you never know what's going to hit you next with. And so
Right.
what ended up happening to us is we launched this business, and within a couple of months, the market just completely tanked on us. GPU miners weren't making a dime. We couldn't get investors to come around the edge, because you have to remember, like, investors as a whole are, especially conventional investors, they're very much risk averse. And the only reason that they were compelled by the ideas of crypto at the time was because that the returns were absolutely crazy. I mean, so crazy that you couldn't ignore it. And so for us, we were like, okay, well, we can ride that wave, but what happens when that wave ends? And then, shortly thereafter, Bitcoin goes from 20 to 5 in a matter of a couple months. And we're kind of sitting in our office like, dude, did we just abandon our entire lives to build this company? And so what we did is we said to ourselves, okay, we're going to try to kind of pull that great entrepreneurial credo out of us and go and pivot our business model. And what was really calling us at the time was a page on our website that we had launched, where we were basically just doing a sign up for hosting. We had just thrown on our website. I'd say we come from a data center background. Our parent company is 25 years deep in data center and IT infrastructure. And so, and by the way, when I say parent company, I literally mean the parent, the father of my partner owns this company, and we've been family friends since we were kids. So Arlen and I were always surrounded by that. But the interesting thing was that we just never really saw where that connection was going to lie in Frontier. We were more focused on being kind of that boutique consulting service because we both came from consulting backgrounds. But what ended up happening is we put this page up on our website. We ended up getting some hits, and we say, okay, cool. Let's start co-locating these servers in our parent company's data center. Problem with that was a 25 cent per kilowatt hour data center. So that wasn't going to happen. This is a traditional tier 3 data center.
In California?
In California, HVAC cooling, the whole thing. Like, obviously the market wasn't going to be able to respond well to that.
Right.
And so, as I've been saying time and time again, like, to put a long story short, because there's so many interesting layers to how Frontier came to what it is today. Ultimately, what ended up happening was after we had started co-locating that data center, realizing that that wasn't going to be realistic, we ended up partnering up with a company out in Indiana that was building a small 5 megawatt indoor mining facility. Kind of came side by side with them and said, look, like, we want to do this together. Let's come in on this. We'll put a little bit of cash into it. You put a little cash into it. We need to drive our costs down. Their costs weren't much better. It was like a 7-cent base power rate, but we at least knew that we could throw a little bit of the initial kind of startup friendly famine friends money into it. And ultimately that's where the hosting journey got started. We built out a small facility in Indiana, filled it up with about a megawatt of miners. By that time, our investors were like, okay, cool, this is serious. You guys can put 400, 500 miners into a facility. And so we can go into all the layers of the other pieces of this story over the course of this podcast but the high level of the conversation was that's where we really began everything in hosting. And over the course of our time since then, which has been about a 2-year stretch, we've been building out data centers throughout the US. We're really proud to say that we've either managed, owned, built, or served about 6 different data centers in the US, 1 data center up in Canada. And we've now consolidated our operations to our 2 flagship sites in Colorado, US, and in Calgary, Canada. So exciting times and wild ride, man.
So there is a lot to unpack there, and we're going to go through a lot of it. First things first, though, why no social media prior to all of this?
Great question, man. Here's the interesting thing, right? So I grew up in Los Angeles. In fact, I'm in Los Angeles right now, and as you can see by the sun, that's
weather looks terrible, by the way. Weather looks awful there.
Looks horrible, right? Yeah, I know. It's not a fun place to be at all. I think for me, I was so saturated with it growing up, and I was so saturated with the whole celebrity culture and online culture that I've always been very countercultural in that regard. I think that's part of the reason that I wanted to go down the path of entrepreneurship, was to go a little bit against the grain ultimately. Yep. And for me, the other thing too is, like, I prefer to live a little bit more of a private existence. Like, I don't need to tout everything I'm doing online. I'm one of the big believers that, like, if you really want to know me, and just contact me, like, I'm more than happy to have that conversation. But you know what, honestly, Whit, solidified it even more when I got into the mining space. For those on your podcast that are really deeply involved in the kind of the culture of this industry, I think we all know that there can be a pretty big target on your back. Yes. And for us, the whole goal was basically, at least for me, was to reveal as little personal information as possible, because we can talk a lot about the horror stories we've experienced in mining, man, but I've had some very strange interactions with people who are, stating the name of my girlfriend and my mom and stuff like that. And I'm like, you know what? We're going to stay 100% fully anonymous online going forward. It's hard to stay anonymous in a public-facing role in the company, obviously, because, in many ways, I'm kind of the outward face of Frontier. But I don't necessarily need people to know the intricacies of my life. I'm a big believer that if you want to get to know me, find me on Telegram. Happy to have that conversation.
Yeah, it's social media it's a funny thing. So I was in college when Facebook launched, just to date myself there. And it was amazing, right? It was a great tool to connect with people. It was a great way to find out what to do for the evening. And as a promoter, I used it a ton for work. But it morphed into something different. And every iteration has just been more and more invasive. And it's just gotten to a point where I think people are so focused on the life that they live online that they forget to actually, like, create a life off of the internet, right? So yeah, I'm with you there. So, okay. So going away from social media, working with 6 different data centers around the United States and in Canada, and being involved with Bitcoin and cryptocurrency for quite a long time now. I mean, you're basically an old man in crypto.
Isn't that weird, man?
Yeah, dude. Like, every year in crypto is like 21 years normal life. Like it ages you so much.
It's like dog years.
Yeah, dude. But it's, it's fantastic. I think it's great that, and it's really exciting that we're able to pack so much information and so much knowledge in such a short a period of time, and everything is so dynamic and so fast changing. It's just, I mean, I've never seen anything like it, right?
Yeah.
So as you guys have built and scaled your business and continue to grow and iterate, right now is probably one of the more exciting times in Bitcoin and in mining.
Absolutely.
How have you guys fared over the last 3 months in that period of just like endless range? And how did you guys maintain in that, somewhat tough time?
Yeah, well, I think, man, we're, I always like to say we're built by the bear market in many ways, because our company, we literally launched it. I mean, formally, Frontier got launched in December of 2017. Come March of 2018, market wasn't looking too great. And so we've basically been battling the bear market for the entirety of our company's life. And I think because of that, we've just learned something that candidly a lot of the players in this space haven't quite figured out. And that's how to stay really lean as a company. Now, the secret to doing that, frankly, is putting in a lot of extra hours. So you talk about being a veteran in the space. I feel like this space has aged me for as long as I'm a quote unquote veteran in it, because I've got some gray hairs, man. I'm only in my late 20s. But that being said, I think number one, being built by the bear market. Number two, just the fact that ultimately, like, our business model is very much built around the little guy, or at least that's what it was built on the back of. And I give a lot of credit and a lot of love to all of our small clients that helped us get to this point, because ultimately we had this our attitude was basically, look, like, we could go the traditional DC, or I guess the traditional mining center route of like, let's go find that moonshot client, let's go find that guy who's got 1,000, 1,500, 2,000 miners. Let's put our entire team's effort into making sure we can make a deal with him. Let's squeeze our margins. Let's tighten everything up. Let's get him through the door, because that's what's going to get me my Lamborghini. And I don't want to point names to any people in the space, but there were certain people that I literally did take that role. For those who are curious who those people are, feel free to Google them. But that being said, for us, it wasn't that at all. For us, it was like, let's do everything actually to slice cost and actually increase margin. And the way to do that was by acquiring a small client. Because there's one aspect of this industry, and Whit, you and I had a great conversation a few weeks ago about this, about the most underserved people in mining, which is your average mom and pop miner. And by the way, for those out there, when I say average mom and pop, I'm talking about 1 to 10 machines. I mean, I'm talking about very few. But for us, we built a business model that was centered around, we don't have any sort of discrimination across the actual size of our clients. Everybody gets treated the same. Everybody gets the same level of service. Everybody gets that same level of relationship through our company, because we're very much focused on growing this industry. We're not necessarily here just to make a quick dollar and turn around. We're here to build the backbone of the technology of the future. And
just to jump in on that real quick, because I think a lot of people don't know this. And if you're not familiar with the data center space, it's something that you don't even think about. But the challenge for smaller miners isn't necessarily the cost of mining at their house. It's that if they ever wanted to tap into any kind of real economies of scale, or put their miners at a facility that is able to offer them better rates, there are very high minimum order quantities for most data centers around the world, right? And you're talking like 100 machines, which at $1,500 to $2,000 a pop is well outside the realm of possibility for the majority of people. Most people can put together $1,500 or $2,000 so that they can support Bitcoin's network. The only challenge is that if they're not able to go in a facility that's allowing them to pay 5, 6, 7, 8 cents per kilowatt hour, then they're paying 15, 16, 25 cents per kilowatt hour at home. And it's just there's not a good value proposition on that, right? You're not ever going to see a return on your investment. And it deters people from home mining. And that's why the narrative keeps getting spun about, mining is only for the big guys, or you have to be a well-capitalized large player to make money. So I love hearing you say that.
I mean, look, the other thing too is, like, if we're really trying to create a truly decentralized space, we should be able to democratize the access to mining, because ultimately, like, we want more small miners. Like, if we are real, true, honest believers of Bitcoin and blockchain, then we want more small individuals, because the original concept behind mining was that everybody could do it at their home effectively, right? Like, we want to distribute compute power as much as possible across the network. Now, granted, that's a lot of what we believe in, but it's also just natural. It was natural to our business model at the time, because we were a couple small guys entering into a big space. We're not a company that came into the space with hundreds of millions of dollars like some of our competitors. We were guys that bootstrapped and white knuckled our way through. And I think that's why a lot of our clients are big fans of us and have built great relationships with us, because we've had to go that extra mile. We want to go the extra mile, but our business model has required us to do that so that we can survive. But ultimately, that's what's allowed us to get to where we are today. So to answer your question about how we've ultimately survived in the bear market, man, I mean, I think it's been a mix of, number one, just that kind of lean startup, scrappy mentality, without question. Number two is being able to have small clients who are confident long-term believers in us and frankly are willing to pay that slightly higher rate to get our service and to get access to this market, so they're not stuck paying 15 cents per kilowatt hour at home. And then I think the last piece too is, like, end of the day, this is one of those industries where if you want it, you got to work for it, man. And for us, I think everybody knows that comes across Frontier. There's a reason why you can reach me at almost any hour and any time zone. Like, our goal is to be that around the clock player, here for you, here for the industry. And we'll continue to do it until we physically can't anymore, honestly.
For anyone who's watching or listening, just know it's currently 4:30 a.m. where Kyle is right now. So he just we got him out of bed early for this one.
That's right. That explains
dude, look,
the sun in the window.
It's great to hear you say that. Mining is incredibly competitive, and it's gotten to a place where miners are willing to help other miners now, and the space is very inclusive, albeit competitive. And I think anyone who's reading press lately around the mining industry is seeing that the claws can come out, right? There can be some tough things that people have to fight through. So it's good to hear that you are you guys are scrappy and lean. And I think you're like, how do you feel that your previous background in the startup space benefited you coming into mining?
It's a good question, man. Well, I mean, I think number one, just from the top, that lean startup methodology has been a hugely impactful piece of how we built our business. But, I think more so than that is that, look, I'll be honest with you. And again, I'm not really one to point fingers at anyone in the space, but I do think that a lot of people got into the space for the wrong reason, to be completely candid. We've been involved in this industry for a long time, and we do know that now that a lot of the sort of shady, unethical players have been removed from the industry, you realize, and I was having a super interesting conversation with some of my guys over at Binance the other day, who just launched their new pool, by the way. You can check them out, pool.binance.com, to give them a shout out.
There you go.
I was having a good conversation with my guy over the heads of their pool, and we were like, it's captivating. Like, in this industry, there's probably 150 people that are like really actually doing this on a day-to-day basis. You know what I mean? Like 150 real credible players. Of course, you've got lots of minor owners and you've got a lot of investors and stuff like that. But in terms of like the operators who are doing it on a regular basis, it's a very small group of us. And so, how did my previous background ultimately help me in this industry? Well, I think taking an approach that, it was almost a blessing that I came into the industry without a strong understanding of mining and crypto. I came into this industry really as a guy who had a strong understanding of business and a strong understanding of the customer relationships. And I think that's kind of helped the tinge of ignorance towards crypto and mining has actually been to our benefit, because we just treat people as people. Like, Frontier's approach to business is a lot different than a lot of the individuals we come across in the space. We always call it a Frontier family, and that's exactly what we're trying to build. Like, our clients become friends. They become, this might be a little bit of a stretch, but they become sisters and brothers of the company. Like, the real concept that we're trying to build here is we're trying to build an inclusive community that can collectively help to lift up the overall world of blockchain and cryptocurrency, particularly this niche community of mining. And for those of you that have ever gone to, and when I say those of you, meaning your audience, for those of you that have ever gone to a mining event or something like that, there's a reason I call it the crypto sisters and brothers, because it really does feel like a family at a certain point, because the industry is so small and in its nascent stages. Like, we all have to collectively pick each other up. So, not to go on too long of a philosophical rant, but ultimately, I think what really helped us get to the point we are today, and what I carried over from my previous businesses, is that we wanted to build a unique level of relationship with our customers. We wanted to build a unique level of relationship with people in our industry. We wanted to grow this space, not just professionally, but personally and philosophically, because we know that if we do this right, then we get to be the pioneers of the future of one of the greatest technologies, in my opinion.
Well, look, we're in alignment on that, right? I think that we've both dedicated our lives to this, and it's awesome to see things that are starting to pick back up now. Now that the bear market appears to be over, you commented on this a little bit as we got into the show.
The bear market.
It was brutal, right? Crypto winter.
Yeah.
Look, I've never experienced. Dude, I never experienced a good time in crypto until recently. Like, I bought the top in 2017. I rode 2018 and 2019. I quit my job when I bought in. I literally I had the fortune to do pretty good early on and retire at a fairly young age. So I literally wasn't working, and I took all of the money that I'd set aside
Yeah.
for a new venture, and I put it all in at the top, like all in at the top. And I mean, whatever, it ended up panning out, but those 2 years were enlightening, let's say. But now coming into the last 6 months, it's been fantastic as a
Thank
business
God.
owner, dude. So now, as a business owner, going into
Yeah.
work is probably a little bit easier. How does the vision
Yeah.
and the vantage change for you guys as now we're looking at a different profit level every day for mining?
Yeah, yeah. Well, what I can definitely say, and I think I can speak for everybody in the industry when I say this, it is I'm incredibly grateful that Bitcoin finally picked up and the rest of the market did. And I think as long as people who are Bitcoin maximalists, like myself, and long-term believers in the overall ecosystem, we all knew this was coming. It was simply just a matter of time. And I think the fact that we were able to weather the storm long enough to kind of see at the end of this initial tunnel is something that I'm incredibly excited and grateful for. I also think that ultimately, like, the thing that's probably the most exciting about this time for me is not just the fact that, oh, cool, we can make more money and our clients are more successful, but also that we're showing that Bitcoin can weather a lot of economic storms. And ultimately, on the global macroeconomic scale, the economy is really not doing too hot right now, particularly in the country that I'm in. Now, if you're an investor in the U.S. stock market, you're probably like, oh my God, my returns have been crazy. And yes, you're true, thanks to a government that has stimulated our economy and printed $1.5 trillion over the course of the last 6 months. But in reality, we're in really, really dark economic times with 25 to 30% unemployment rate in the country that you and I are both from. And so ultimately, I'm really grateful at the end of the day that cryptocurrency has shown that it can really be like that economic safe haven. It can be that globalized backbone of the economic infrastructure that we hope to all one day operate in. So I've said it excited and grateful probably 3 times now, but that's really how I feel. I'm truly excited and grateful for the road that we have in cryptocurrency ahead, and the fact that it's shown vitality amidst global economic downturn. Now, what does that actually mean for Frontier now, and how does that change our vision, and how does that change our day to day? I think a lot of people know when working with us, like, we don't necessarily change our tune as a company, regardless of whether Bitcoin's at 4,000 or 20,000. We're still the same kind of everyday hustlers as we've always been, in terms of really trying to go that extra mile for our clients, really trying to go that extra mile for our partners, and really trying to go that extra mile for our industry. The only difference now, and this is one of the things that we've worked very hard to achieve, is that we've reached a point in the industry now where I think people recognize that Frontier is legit. We're going to take care of you if you come and work with us. And so because of that, ultimately, we just end up getting slightly bigger names calling us. We get more people who are, more eager to work with us because, number one, we're in up market. Number two, if you want to protect your investment, ultimately, like, that's what Frontier is really centered around doing. I've never described the company as being, the cheapest company in the space. If you're looking for, absurdly low KWH rates, we're not the right fit. If you're looking for really low infrastructure rates, we're not the right fit. But if you're looking for, what we are trying to create as a world-class experience, and more so than that, you're trying to protect your investment, we really see Frontier as being a potential good partner for you in this whole world of computational power. Go ahead, Whit. I was about to go rant on about computational power.
No, so before we get into that, though, being that you come from the background that you do right now, obviously there are tiered data centers in the traditional world, right? We don't have that in crypto. I mean, there are data centers that will claim that they're of a certain tier, right?
Yeah.
Do you see us moving towards that tiered system or that hierarchy? And I mean, is there a government body or a body that needs to be formed to make this happen, or could that fall under the existing regulation system?
It's a good question, man. It's a good question. I'm perplexed, so I scratch my beard at that one. I think what's sort of interesting about the concept of a tiered data center system is, the whole concept of that is basically to help vet and verify players in the space, ultimately.
Yes.
And in the world of mining, I think, as you and I have discussed before, that's just something that's ultimately missing pretty significantly in our industry. And that's one of the things that I have to, I kind of have to advise clients of pretty regularly, like, whether they're going to work with us or not. I always say, just be careful in this space, because it's very, very, very hard hard to know who you're working with because there isn't a third body that's coming in and regulating, you know, the players in this industry. Effectively, anybody can enter in, anybody can say whatever they want. And if, you know, if they push you hard enough and they're good enough salesmen, you might end up biting too. And I see very smart people, from people with PhDs, man, to your next door neighbor, who unfortunately have been hit pretty hard financially by mistakes that they've made in this industry. So I do think a governing body needs to exist. Do I think that mining centers will reach a tiered level though? No, and I'll explain why. Mining is one of those things where, like, the whole idea is to basically become as lean as possible, right? Like, you want lean infrastructure, lean internet, lean power, lean cooling. Like, you want to do everything you can to drive down cost. And sometimes driving down cost means driving down uptime, driving down service, et cetera, in an effort to basically keep your miners profitable for as long as possible. But I have a theory, Whit, and I think this theory will end up playing out, particularly with our industry over the course of the next couple of years, which is that mining will eventually not just be mining cryptocurrency. Mining will eventually evolve into the overall trading of what I believe is one of the greatest currencies of the future, which is computational power. And so with computational power kind of taking the forefront, let's say 4 or 5 years from now, or in many cases for some of us in the mining space, people are jumping on this even sooner. And by the way, for your audience that doesn't totally know what I'm referring to, we have to remember that effectively all cryptocurrency mining is it's the exchange of computational power for a cryptocurrency-based reward. I mean, that's the essence of what we do in this world of mining. But the reality is that there's many other places where computational power carries the same value. Places like artificial intelligence, film rendering, cloud gaming, cloud computing, et cetera. You know, you can basically have you have the same exchange of value. The only difference is that you're not dealing with a volatile currency. And so your income that's generated is not based upon the price of an external asset. It's actually just based upon the perceived value of your service. And in some cases, the competitive offerings as well. What I mean by that is, like, if you go to vast.ai, VAST.ai, it's effectively a marketplace for renting GPU hash power, but that hash power is not being, and I shouldn't even call it hash power, that processing power is not being directed towards cryptocurrency mining. It's being directed towards things, like I said, like film rendering, AI, et cetera.
Edge computing.
Edge computing. Yeah, exactly. It's this whole concept of edge cloud computing, basically. And the idea here is basically that as a miner, if I'm evaluating the space and I'm now really warmed up to the idea of, okay, cool, I love the concept of monetizing my computational power, I'm just going to be looking for any opportunity to do that, whether it's in Bitcoin or not. And so when I think about your core question, Whit, of where does the space go? Do we get to a tiered data center system? I actually think what's going to end up happening is we're going to end up returning to the traditional tiered data center system. And I think it will be existing in the spaces that I had just referred to. But what I do think is going to occur, and this is what we're really excited about here at Frontier, in fact, we're launching a new initiative in 2021 to support this, which is that I think we will enter into what we're referring to as a tier 0 data center system. And by the way, the current tiers exist in tier 1 through 5. Tiers 1 through 5, again, just refer to the overall, like, uptime, SLA, service quality, you know, level of your engineers, et cetera.
Which is best, which is worse? 1, 5.
Which is best, which is worse? I think level 5 is the best, right?
Okay. I don't know. That's why I'm asking.
Yeah.
Okay.
Being in mining so long, like, I've never quite been able to wrap my head around whether level 1 or 5 is best. We typically work with level 3, which sits right in the middle. That's what our parent companies operate.
Gotcha.
So sorry for you data center people out there if I didn't nail my terminology right. Living in mining so long, you know, I get really focused on this space. But when I think about tier 0, and this is actually speaks to what I just said, tier 0 being the leanest form, basically, like being the most cost efficient, but still being able to offer the high level of service that you'd receive in, like, a tier 3 to a tier 5. What ultimately we envision that looking like is, like, where do the traditional data center needs and the mining best practices kind of meet in the middle, right? If you look at the data center world right now, it is extremely antiquated. It's extremely overpriced. It's not efficient. It's not lean. Yet mining has come in and said, look, we'll go take 100 computer servers and shove them into a storage container and stick some fans on the side. And we're effectively going to give not quite the same, you know, suite of services that you can get in a traditional indoor data center, but we're going to give you about 80% of the same, right? But the difference is that we're going to be able to shave costs down by about 80% as well. And so the idea basically is, for us, is like, how do we take the best practices we've implemented in mining, introduce them to the world of data centers, and then use those data centers to power future technologies that are outside the world of cryptocurrency and blockchain? That's where we really see the system going. So again, getting back to your core question and not to rant too long to your audience, like we really do see that we're going to be exiting, not the entire industry, but we do see a mass exodus from mining occurring in the next 5 to 10 years, particularly as profits get slimmer, and ultimately like more large market participants get involved. The little guy's going to get squeezed out, but still is going to want to look for a place to put their capital. And we believe that's going to be in things, like I said, computational power needs outside of mining specifically.
Yeah, and you and I have talked about this, obviously. By the way, this sounds very similar to a previous guest that we had on the show, JP Barrick from Mining Store.
Oh yeah, that's our guy, man.
Yeah, JP is awesome. But he had talked about this concept when we spoke. I guess it was like a month ago, but it's great. I love hearing. Are you guys working together on this?
JP and I were actually not working together on this one specifically, but what's funny is that Mining Store is one of our first buddies in the space, and I get the feel that we'll probably connect with them in the next world as well.
Dude, JP's awesome.
Yep, sharp guy, anyways, really sharp guy.
He is. Getting back to the hash power though, and in this same vein, I mean, we called our company HASH8 for a reason, right? We think that hash rate compute, call it whatever you want, right? You can't call Bitcoin mining high performance computing, but I do think that you can make an argument that hash rate and compute are generally the same thing. So
agreed.
We believe that right now, basically what's happening is Bitcoin is a nice proof of concept for everything that's going to be used in the future on traditional compute, right? Whether it's the derivatives products, the financialization that's going on, the build out and infrastructure and how it's being optimized for Bitcoin mining and can later be used in a similar fashion for traditional compute. Because I mean, Bitcoin data centers, like you said, lean operations, they are built at a fraction of the price, right? I mean, what is it? It's like a tenth. It's something. It's ridiculous. Like
and in some cases even less than that. I mean, here's a crazy number for you, Whit. Because we come from the traditional data center space, we've been able to kind of see where the differences in price lie. In the traditional DC space, you can be spending anywhere from $1 to $1.2 million per megawatt on infrastructure build out. Like that is just unheard of in our world. I mean, if you talk to most people in mining, they're like, I want to drive by per megawatt cost down to like maybe 100 grand. And in many cases, people are trying to go even lower than that. Yeah. I mean, I think frankly, you're starting to talk crazy if you're saying I want to go below 100 grand. I really think you have to be spending around $250,000 roughly to be able to do it well. But all that being said, bottom line is like we're talking about a 4 to 5x reduction in cost. The writing is on the wall here, and how easy it is it potentially to go to an Amazon or a Google and say, look, why don't you take 1% of your data center operations and put them in an environment where you can offer the same level of service, the same level of uptime, but the difference is that you actually get not only reduce cost, but also you get increased distribution of your data centers. And just to go on one quick side note on this, the interesting thing about the future of compute is that it's going to require not only distribution, but it's also going to require localization. So if anybody, for example, has tried the Google Stadia or Google Stadia project out, which is basically their cloud gaming initiative, Google tends to be the one that tries to like get to market with these ideas first and test them to see if they work. So they launched this product. If anybody ever used it, it was really, really poorly run. And the reason why is there was just massive latency. Like you just could not play your games. I mean, ultimately they were slow, they were laggy. And the reason why was because you're physically just too far from the actual console itself. You're physically too far from the data center. And so how do we solve this? Well, the idea is basically that you go take mobile data centers, queue all of the containers in the world of mining, you get mobile data centers that are localized outside of major metropolitan areas. And you say, look, I want you, Google, to put, 10,000 or maybe not Xboxes, but whatever system they end up using in the future, I want you to put that adjacent to Los Angeles, right? And we're going to be able to power all of the cloud gaming initiatives in Los Angeles by doing that versus having a data center in Oklahoma City that's trying to power Los Angeles. The latency will just not end up being effective. So we really feel pretty confident that when you think of where data centers are going, I mean, you're going to have to get to a space where not only are they far less expensive, but they're far more distributed. And because of that, they have to be less expensive because you have just to build more of them at the end of the day.
Yeah, man. We have the exact same outlook, I think, on where things are headed. The Stadia example is the perfect correlation to how things will have to expand. I think that, as things do move regionally and you have local data centers to support compute in a region, that's when we'll see, I mean, I think at some point we're actually going to see super users. Like right now, people will pay more for higher speed internet, right? I think eventually we're going to see some of these companies passing on their cost for compute to the end user, and the end users wanting to crank up their consumption, whether it's for an edge in gaming or because they're a medical student and they need better compute for models that they're running. There are tons of examples, right? But I think that we're going to enter the era of the compute super user in the next 5 to 10 years.
Great.
And that's when it's going to get really crazy because right now compute is kind of nebulous. Like it's a hard thing to price, right? The companies, they all have their costs, sure, but I don't think they've ever looked at it like, okay, how do you define a unit, right? And how do you price that unit? And if I wanted to resell a unit, how do I do that? And I think that this is where specifically Bitcoin is leading the charge because that's being done. And once it's modeled out here and it's proven, which I still think we're a couple of years out from that, I mean, you're opening up to trillions of dollars worth of market potential when it comes to that.
Yeah. And then that's the great thing about mining in this whole world of Bitcoin is like we're doing a really brilliant job as, again, the ones who have to push those extra hours is paving the path towards the future of computational power and what that looks like, in the next 5 years. I do think that like it will be significantly centered around a lot of the practices that we see in mining today, which I think is really cool. But I also think it's going to evolve pretty dramatically because obviously the current mining sector couldn't support, like the current mining practices cannot go and support, some of like the projects that you're referring to, like going and doing like, medical image rendering. Like you can't do that in a mining center. You'd overheat your computer in a heartbeat. So we have to start introducing new practices. I think things like immersion cooling or water-based cooling are going to be a big part of that. I think continually optimizing our mobile data center builds are going to be a big part of that. I think the idea of distributed compute across multiple localized data centers is going to be a big part of it. And I think ultimately that a lot of the players that you see in mining today, particularly the investors, I'm not convinced necessarily the co-locators or the operators in the space as much, because I think that you're going to eventually end up seeing a lot of the bigger names in the world, a lot of public companies enter into this space. But I do think that a lot of the people who are making money in mining today are going to be making money in the exchange of a different type of computational power in 3 to 5 years from now.
Yeah. And I mean, a lot of the bigger GPU facilities already made that shift, right? Like you had a lot of the major GPU facilities who are, and for people who don't know, right now, larger facilities generally are mining Bitcoin, right? There are big facilities that are targeting specific coins and, they've got runs of FPGAs or runs of, altcoin ASICs. But by and large, the majority of facilities, industrial sites are mining Bitcoin. But there were a lot of GPU facilities, right? And when the bear market hit, they had to get nimble. They had to look, they had to pivot. And being that there is a different level of technical expertise that goes into mining with GPUs as opposed to ASICs, these people were able to put together some pretty nifty software to help their GPUs find new uses. And it's been interesting. The challenge right now is the demand side, right? It's one thing to stand up a bunch of machines, but getting the demand is the challenge. Getting the people who are going to buy your compute. So like you'd mentioned, what was it? Vast.ai?
And we really like Vast.ai. I mean, you're 100% right. Like the bottom line is that I think the providers are there. I think I know that there's a couple of players in the mining space who have already converted portions of their facility to be dedicated to non-ASIC specific needs. In fact, if you can support a GPU miner for the most part, not entirely, but for the most part, you can support, an AI-based computer or a neural network based computer, deep learning, et cetera. Like you don't have all the pieces, but you have the majority of the pieces. I just think you're right. Like I think the bottom line is that the information hasn't been widely distributed enough across the major demands, across the major players who demand significant amounts of computational power. I mean, they're still going towards the Amazon, Googles, and Facebooks. And the reason is because they just don't know that we exist yet. Like we're such a small speck on the greater radar of these companies that it's going to be, look, at the end of the day, it's going to be guys like you and I, right? It's going to be guys like, and other people in our industry who really start to publicize the fact that like, hey, there are other ways that you can do something that's been done for decades, right? And it's going to require us getting in front of some of these really, really, really large companies and saying, look, give us a chance. Like, let's show you that we can drive down your costs. We can create more flexible offerings. The other interesting thing too is, like, in the traditional data center environment, for the most part, if you are an owner of GPU equipment, you don't really have the opportunity to like turn your machines off and on depending upon demand. You just, it's a take or pay model, right? So there's just, and obviously in the world of mining, it's not, you know, you can turn your machines off, turn your machines on. Most data centers offer that kind of flexibility. And so I just think like the writing will inevitably be on the wall, but it's just like Bitcoin, it's all about adoption cycles. And for us, we've learned that we're way too early. We're like you said, we're a couple years out, we're a couple big conversations out, but I'll tell you one thing that will make it all move a lot faster with, and that is ultimately going to be the increase in the price of Bitcoin, the increase in the price of crypto assets, the increase in confidence in alternative currencies. Like, once we start to see more and more people enter into mining, inevitably what ends up happening is that you get situations like a Core Scientific, for example. We love our guys over there, where they've got, you know, a former executive of Microsoft as the CEO of their business. That is awesome for the mining space, right?
Yes.
We just need to get more institutional players to be familiarized with our world. Once they are, they're going to say, wait a minute, we have millions and millions of dollars. We can see that these guys are doing something different that might actually be able to serve us and dramatically cut down costs, which is, by the way, the American way, the capitalist way, is how can we drive down costs? So I think inevitably those worlds will end up meeting. It's just a matter of how we get them to meet and, you know, making the right handshakes at the right times.
Absolutely. Okay, well, look, Kyle, as we wrap things up here today, is there anything else, like anything pressing that you'd like to discuss, anything that's on your mind before we get to the end here?
Oh man, there's so many different layers of this conversation that I've really appreciated, Whit. And thank you so much, man, for inviting me on here and giving me the opportunity to have a conversation with you and your audience. As you know, and I'll give you my personal shout of gratitude right now. Just like absolutely love with what your team is doing over at HASH8. I know we had a long conversation the other day talking about why I think you guys are going to be so crucial and impactful in the space. So for people that are listening to this and don't know what HASH8's up to, please check them out. Please feel free to reach out to Whit. They're doing some really cool stuff to add legitimacy to this space. And I think I'll close on that, is just talking about where the legitimacy of this space kind of exists in the course of the next couple of years. The reality is that we're in the Wild West, as we talked about. We're in an industry that doesn't necessarily have a lot of credible, real players. And in fact, it's got a lot of people that want to hurt you versus help you. And so I encourage people who are considering entering into this space, number one, to recognize that this is a really small, nascent industry. So tread lightly and look out for landmines. But more so than that, remember that you're entering into a world that's going to be based predominantly on trust. So find the people that you know, trust, and believe in, stick and ride with them, because believe me, we all need stability more than volatility in this world if we're going to see it grow. We've got enough volatile and dynamic aspects of the world's in crypto and mining. Thanks. So ultimately, the one thing that we can control is ourselves and our own involvement in the space. So I would encourage all the people involved in the mining space, the computational power space, and all the people who are just kind of getting into this world for the first time. If you're coming in here, please don't come in here to hurt us. Come in here to help us. We need more stability. Like I said, we need less dynamic variables, and we ultimately need to be able to control one thing, which is ourselves. And if we can do that successfully, then we have the opportunities to not only be the pioneers of future technologies, but we get the opportunity to do something really, really cool, which is we get to build the racetrack. And I'm really excited to be able to say that you and I are both behind that and kind of one of the first players in this space, Whit. And I look forward, man, over the next couple of years to be able to continue to develop this brand new industry, man, that we get the opportunity to be a part of.
God, I'm fired up now, Kyle. This is a great talk. I'm so thankful that you were able to make time to come on the show, and we will definitely have to do it again. Thank you for coming on.
Absolutely, man. Thanks so much, Whit. And by the way, if any of your audience wants to check us out, just type in Frontier Mining on Google. We'd love to have that conversation.
There you go. And we will definitely put all of the relevant links in the show's notes for all of the viewers and listeners of the HASH8 podcast. Thank you so much for tuning into the show. And we've got a lot coming in the next few weeks, so keep it locked. Make sure that you are subscribed on your preferred listening platform or on YouTube, and we'll talk to you guys all again very soon. Thanks for watching this episode of HASH8 Podcast, a HASH8 TV production. If you enjoyed this video, please consider liking, sharing, and subscribing for more great content like this every day of the week. In addition, feel free to leave a comment below and let us know who you'd like to see on the next episode of HASH8 Podcast. We'd love to hear from you. Also, if you head over to hash8.com, you can sign up for our free weekly newsletter, Difficulty Adjustment. Every Wednesday morning, we provide you with the latest news and information on Bitcoin, cryptocurrency, and mining. Plus, each week, one newsletter subscriber will be selected at random to receive a free Ledger Nano S cryptocurrency wallet. So go ahead and sign up today. Who knows? You may be the next lucky winner. Want more from HASH8? Follow HASH8 TV on Twitter. It's the easiest way to keep track of our newest content all in one place. That's at HASHR8_TV. Thanks again for watching, and we'll see you very soon. Please remember that all content appearing on this or any other HASH8 channel is strictly for informational and entertainment purposes only. You should not construe any such information as legal, tax, investment, financial, or other advice. Consult a licensed financial advisor before investing yours or anyone else's money.